It was another strong session for stocks after retail sales came out this morning. Very impressive numbers. In fact, the biggest rise in more than 2 years. Now, many of the components got a boost from replacement, of course, driven by the aftermath of Hurricanes Harvey and Irma. But I'm going to tell you something. I continue to believe that demand is just more than replacement. And then there's consumer sentiment, which surged to its highest level since 2004. More impressive was the 19% jump in the index of what consumers are expecting 6 months down the line. People certainly are feeling better about the future, and believe me, that carries a lot of self-fulfilling aspects to it. But what I want to point out is the Dow Jones and the consumer sentiment. Both of these reached all-time highs at the same point. This was in January of 2000. Since then, the Dow, which, by the way, has endured 2 major crashes, is up 95%. You know what consumer sentiment is? It's still down 10%. 17 years later. So the gist is consumers, they've been guarded for almost 2 decades, and the so-called wealth effect of higher markets just couldn't overcome the pain and the resentment of big stumbles under both political parties. So that might be changing. And if that's the deal, it would be monumental and certainly could lead to more than 3% GDP growth. Of course, NASDAQ closing at an all-time high today, reflecting tech names that have reignited momentum, led by Netflix. They report earnings on Monday. I got to tell you, Wall Street has been so wrong about this stock for so long that now everybody is bullish. In just the last 2 weeks, 4 upgrades on this stock, including Goldman today hiking its target to $235. There were also upgrades on Google, Alphabet, Amazon this week. Everyone's betting on these momentum names to do very, very well once again. So there we go. We've come back to tech names. We've come back to Goldman Sachs. We've come back to all of these major companies, as you can see here, getting these upgrades. Wall Street ready for them to take the lead one more time. So we started out earnings season tepidly with the bank numbers, but we're going to get to the names, the big names that really, really should get us going. I'm very excited about this market. I think that we really have potential to get into gear, a much higher gear. It depends on how earnings are going to shake out, and there are going to be some bumpy parts to this. For that, you must read my morning commentary every morning. Go to wstreet.com, guys. You should be making money in this market.